Good morning. You are listening to First Title National Real Estate Radio Show. I am your host, Doug Dennison, and we are broadcasting from beautiful St. Augustine, Florida, the nation's oldest city, at WFOY 1240 AM studios. Through the power of the internet, this program is being streamed worldwide on 1240news.com. The show will also be archived on FirstTitleServices.com and TitleCompany.com. First Title is a leading national title agency and are the sponsors of this program. Additionally, this show will be posted on YouTube.com. Our radio show mission statement: to provide an educational experience for listeners in a promotional format for real estate sales across the country. We're going to be talking about real estate, different real estate markets across the country. We've got a lot of topics today. Help us out. We've got a couple people calling in. One from Massachusetts in the Boston area. Give us his perspective of that area, and the other in Florida, but works nationwide, and looking forward to hearing about that. Our guests are VIPs in the real estate business, and we're thrilled to have them on. Our listeners are a mixture of real estate brokers, real estate investors, real estate media, government officials, banking officials, bankruptcy officials, and also the general public. And so when we talk to our guests, we try to basically get all that information out to you so you can hear about it, learn from it, and be able to contact them if you'd like to speak to them. We've got a couple interesting things today. I wanted to talk to you again about the fact that a couple weeks ago, believe it or not, one of our guests was telling me that they were calling somebody from Switzerland, and because they're a client, and the client was saying, "Hey, I heard you on 1240news.com on that radio show," and that's pretty impressive. Switzerland is listening, and hopefully you are too out there, throughout the country, throughout the world. Our first guest is going to be from the Boston area, a good friend of mine, Robert Shapiro, and I'll give him some intros as he's going to be calling in. He's the Executive Vice President and CEO of Waterford Development, which he founded back in 1995. The company has permitted and developed and sold over 1,000 luxury apartment units, 500,000 square feet of office space, 200 single-family homes, and 500 condominium units since its inception. Big company, does a lot of work in the hotel, motel space throughout the country. I met Robert Shapiro, Bob Shapiro, probably 5 or 6 years ago. He has an auction past. He actually took care of the auctions for many of the government businesses through Larry Latham Auctioneers. And again, this was probably in the late 80s, early 90s. Sold really tens of thousands of properties for the government, including FDIC, RTC, Fannie Mae, HUD, and a host of financial institutions, including Bank of Boston, Shawmut Bank, and First New Hampshire Bank. So good guy, and hey, let's see if he's on the line. Good morning, you're on the air.
Yes, good morning, Doug. It's Bob Shapiro. How are you?
Well, I'm fine, and thank you for calling in. I was just giving you some kudos as an intro, and but tell us a little bit about yourself. Where are you from, and what do you do, Bob?
Well, I've been originally from the Boston area and still here. Our offices are based in Needham, Massachusetts, and we primarily focus on I would say the New England to New York, New Jersey corridor. If we can't drive to something, we don't typically want to do the development because we like to be very much involved in our projects.
Okay.
Waterford Development has been in business since 1995. We are currently focused on limited service hotels, of which we are currently involved in about 10 or 11 of those. Previously we've built, I would say 1,200 apartment units, the occasional office park, and probably about 200 single-family homes and some master plan communities that we've done. So that's a little bit of background of what we're doing. We also have a consulting side of our business in the resort and ski industry in North America and Canada, where we do work for individual resort properties in terms of, it could be operations, it could be disposition. We've used the seal bid method of auction marketing, and in order to create value and maximize value in terms of the disposition process. But it's pretty. I would describe us as entrepreneurial, opportunistic developers in the areas of focus that we really have expertise.
Well, again, I was talking about who listens to this show, and although there's many real estate investors and banking officials and real estate brokers, for the general public, what does it mean by a limited service hotel space? What does that mean? And give me some names of brands that would kind of fit in there.
Oh, okay. Well, we call it focus service hotels.
Okay.
And effectively, the brands that we are most focused on is Marriott and Hilton brands. Marriott Residence Inns and Homewood Suites
Okay.
are a good example of what's in a lot of our portfolio. We give people a very high standard room, something that they would expect in a boutique hotel, with a full kitchen. And typically what you have when you have a limited service hotel, and I think that the official word is focus service, is you don't typically have restaurants. You give people a good breakfast. You give them a courtesy meal probably 4 nights a week if they'd like that.
Mm-hmm.
We do have bars in our hotels which are really aimed at as an accommodation to the people who are staying there. But the idea being that you can give people a great space and a very good value for money, and a very comfortable environment. So particularly for the extended stay audience, it's nice to know that, excuse me a second.
Sure.
I think that was a sneeze, but
no problem. Hey, this is live radio. We understand that.
Nice to know that you can go out and shop. I mean, we will often shop for people, so groceries, etc., will be in their rooms when they get there. So it's meant to be more of a home atmosphere. Typically our average stay is in the, call it, 1 to 4 day range, although
Okay.
we do have people that have been in our hotels for as long as 6 months on either extended projects or people coming from, moving to an area with their families, et cetera. So it's a very good product niche. We like it very much because it's efficient and you don't carry the overhead of conference facilities and the fixed cost of restaurants and things that you see in a lot of full-service properties.
Well, again, as you know, I am from the Boston area, New England area, and grew up there and love the area. And so I was up there a couple years ago for kind of a family reunion and stayed at one of your places in the Portsmouth, New Hampshire area, and it was very nice. Service was great, and I didn't find out until later that you had actually built it. So, again, kudos to you, and very nice brand, very nice accommodations, very nice service. So you do a good job. Tell me about the real estate market up there a little bit, Bob. We get a lot of calls from across the country. We had New Mexico calling in. We've had Texas calling in, Florida, of course. What's happening in your area?
Well, let me give you some overview.
Cool.
I mean, as far as the residential market is concerned, we've seen a very significant rebound here. After the surviving the Great Recession,
Yep.
we're now seeing houses coming on the market in the greater Boston area and selling in a day with multiple offers, often over the asking price. So we're up about, I'd say, 12% this year in terms of year over year. So that's been very significant here. As far as the commercial real estate market is concerned, Boston happens to be one of the top 5 markets for the institutions, and as a result, things like the multifamily, the apartment pipeline here, in my opinion, have gotten very much overheated. I don't know if your audience understands cap rates, but basically what a cap rate is, the lower the cap rate, the higher the value of the property. And for example, if something is trading at a 10 cap, that would mean that in the first stabilized year that people would expect to be making 10% on their money in terms of a rate of return. Apartments here now are being pro forma'd at 3.5 and 4 caps, selling at extremely high prices. We actually believe that is the top of the market, and frankly, as a developer, when you're largely going to be relied on for personal guarantees in terms of not only completion but some level of recourse, if I'm going to make 3.5% of my money, I think I'd rather buy Exxon stock and collect a dividend. So that is a market that is not of interest to us, and I think what you'll look at, if you look at some of the major REITs in that market, like Archstone and Avalon, you'll see that they're selling more property than they're buying at this point to try to take advantage of that curve. And that's actually worked very well for them, because what they've effectively done is sold their older properties at very high prices and effectively turned their new inventory by building up into the marketplace. That works for somebody that's publicly traded with a lot of money. That certainly doesn't work for an individual developer.
Well, that's good information. You and I also have a past history of doing real estate auctions. Tell the listening audience of your background there, if you would.
Well, I was the president of Eastern Operations for Larry Latham Auctioneers, and in the period during the savings and loan meltdown, we sold an awful lot of property, probably on the order of well over $1 billion worth of property, with the federal government as our biggest clients, but also people like Fannie Mae and Freddie Mac and a number of banks and private developers. It's a very effective means of marketing property, and one that is certainly finding more traction today, and one that we recommend to our clients on the consulting side, particularly when you're dealing with specialty and resort properties. The sealed bid auction methodology is very effective that way. And one of the things that we are very focused on, particularly in the ski industry, is that we create value for our clients. We're not liquidators. The idea is to maximize the value and to help people make good business decisions, and the auction methodology can be very effective in doing that. Particularly in the world of what's changed since we were very much involved with open outcry auctions is the internet now is such a huge percentage of your marketing focus.
Yes.
That it really allows you to be extremely effective in a very broad outreach for a lot less money in marketing dollars than that you would traditionally have to spend when you were reliant on print media.
Well, you're right, and if you remember back in those days, we would make up these great, big, expensive books, and then have to mail them out, and a lot of cost and a lot of time in there. And of course, in the internet now, I mean, it's not quite as simple as a push of a button, but it is so much quicker, it is so much cheaper, and it really enhances the auction method because sellers are saying, okay, well, if it's only going to cost this, then, I'm in as far as marketing. I thought it would be much more. So that's a big change in the auction methodology, and of course the internet has changed our entire world, as you know. Tell me a little bit about your ski resort operations. I know your partner Murph Yule is one of the highly credible people, experts in that field. You go everywhere. Are you being hired by banks to look at these ski resorts and tell them what to do? What kind of situations do you get in, Bob?
A lot of our clients are banks, banks or hedge funds who may be considering a major investment where we may be able to do their due diligence for them.
I got it.
Murph Yule is certainly one of the ski gurus in
Yes.
terms of having enormous experience, having sold or operated 45 different ski resorts
Wow.
over the really the last 15 to 20 years. We do have the ability to come in and physically operate a resort for a lender, and then again help them reposition it and look for an exit strategy. Sometimes it's banks. We've done a bunch of work for some of the major New York banks. One of the things that we did initially was we did the original valuation for a big hedge fund out of New York called Fortress Investments when they took Interwest private, and did the original valuation there for them. And on the other side of things, we sat around the table with people that were buying the Interwest debt in terms of giving them advice and being involved with them as well. So it's pretty diverse. That industry, the National Ski Area Association, is a very plays a very important role in that business, and the business certainly has its challenges as well as its growth. I mean, it is definitely reliant on Mother Nature.
Yep,
and,
yep.
This year was a good year for the industry. Last year was a disastrous one. So it really depends on a lot of things. With global warming, there are an awful lot of challenges now because properties in the West that used to get 450 inches of snow a year are now getting half that amount. We've seen projections here in New England where, some places like they're predicting places like New Hampshire may only have 6 or 7 active resorts by 2030 because of what's happening with the weather patterns.
Wow.
So there's a lot of major changes that have been happening in the business, and the consulting part of the industry is intellectually very stimulating, and the business tends to be populated with very nice people. So that part of it is enjoyable. Nothing you're going to retire on, however.
Give us your crystal ball for the New England area. Residential, then commercial, still going upwards. Are we going to see any kind of fall off? Is it going up too fast? Will it even out? What's your take?
Well, on the residential market, I think that you've got a good 3 to 5 year run. There's an awful lot of pent up demand. While you've certainly seen a spike in interest rates over the last couple of weeks of as much as 75 basis points, it's if people had told you that 4.5% mortgage, 30-year mortgages was a high number, 5 or 6 years ago, I mean, they'd look at you like you were crazy.
Exactly.
So rates are still low. I think that some of the increase in mortgage rates may temper some of the fast appreciation in values, but you have an awful lot of pent-up demand, and the market was enormously depressed from, call it 2007 through 2011. So I think you've got some very rational recovery, and even with the appreciation in prices, we are still probably Oh God, I would say 15 to 20% below, where the prices were in 2006 and 2007.
Yep.
As far as the commercial market is concerned, timing is everything. I think, as I said to you earlier, I think multifamily is a bit overheated, and
Yep.
I don't think that you're going to see the rent growth that people have been projecting. If you remember, as recently as a year ago, the talking heads were basically saying that nobody was ever going to buy houses again, and that always, it's a cyclical business.
Yes.
The people that own apartments continue to push the rents, and when it gets cheaper to buy, then people buy houses, and because they think that that that's obviously a better investment. I mean, you've got things being built in downtown Boston that are pro forma at $5,000 a month rents. I just don't see that being a market that is endless in size, which
Sure.
is where you see some of my skepticism.
Yep. Yep.
On the hotel development side and in the office market, yes, it is a cyclical business. I would think that you've probably got 3 years to build things right now. We've been active for the last 2 years in construction.
Mm-hmm.
You want to be building at the bottom of the market. I think you have probably 5 years to exit if you're looking to sell property.
Okay.
And typically the institutions will be paying the highest prices at the top of the market, and that's obviously, again, as a entrepreneurial developer, that's the time to get out. So I would say, as far as this part of the world is concerned, and obviously geopolitical things are hard to project, but
Yep.
I would tell you 3 years to build, 5 years to sell on the commercial side, and I think we're getting back to a more normalized real estate cycle as far as residential is concerned.
Bob, you are always a great interview. How do people get hold of you and contact you?
They can contact me at by email at rshapiro, Shapiro, at waterforddevelopment.com. Waterford Development is 2 Ds in that. Or they certainly are welcome to call our offices at 781-449-7380, and we'll be happy to talk to them.
Well, Bob, thank you so much for being on the show. Give my best to Murph. Also want to give you raise for all the work you do for the National Multiple Sclerosis Society. You've been a big cheerleader and promoter for that for years, and you do a wonderful job. So,
well, we appreciate the support that you and your colleagues have given us. In fact, we have our Boston to Provincetown ride this weekend. We'll be riding about 2,500 people, hopefully not in the rain. So I'll be riding 180 miles on my bike this weekend, and we're hoping to raise on the order of about $2.6 million for this ride. So
that
we're
is
making good progress in finding a cure for MS.
Good for you. Bob, thank you so much for being on the show. You have a wonderful weekend.
You do the same. You take care.
You
Thanks
bet.
so much, Doug.
Bye-bye. All right. That was Bob Shapiro, Executive Vice President and CEO of Waterford Development Corporation in Needham, Massachusetts. Longtime friend, very knowledgeable in that area in the limited service hotel space. A great interview, as always. Really an expert in that field. Folks, I want to thank everybody for calling in, and we will be back next week. Take care.